Hi, I'm Andrew Masters, an analyst from FIBO Group, and in this video we'll talk about the graphical analysis as well as the basic components such as lines, levels and trend, except for levels and line chart patterns can be singled out in the market. They also help us to define the positions opening and to set the profit-taking goals. Chart patterns consist of the same levels and lines we spoke about earlier. There are three types of chart patterns: reversal patterns, trend continuation patterns, and bidirectional patterns. That is, they can indicate either trend reversal or its continuation. It's important to emphasize that there are much more patterns than we will be described in this lesson. We will study the most popular and useful ones. It's important for you to understand that the very principle to learn how to use them, if the topic is congenial to you, then there is a lot of literature about this topic. You'll be able to enrich your knowledge by your self-education or by contacting us. We are always ready to help. Let's first deal with reversal patterns. As the name implies, they indicate the reversal of the trend. One of the most popular reversal figures is the head and shoulders. This is a reversal pattern and consists of three successive peaks, the average of which is the head, is the highest, and the other two peaks on each side are the head and the shoulders. The shoulders are smaller than the head and are approximately equal, and the line that is supporting the shoulders is the so-called neckline. It is important to remember that the head and the shoulders is formed after an uptrend. This is the pattern that changes the direction of the price, creating a new downtrend. Left and right shoulders are not always symmetrical. They may have different widths, heights, or lows. A critical factor in the conformation of a head and shoulders is the intersection of the neckline called the support line. At the break of the neckline, from the top down trading volume increases, and it means it's time for the current trend to change. The inverted head and shoulders you may find at the bottom of a market, and it's the same reversal pattern once it is formed that it means the end of a downtrend. Double top. The formation of the figure double top is identical to the figure head and shoulders, but it lacks a head. The double top consists of two peaks that are about the same in height, and the resistance line is drawn through the two vertices. This resistance line may be considered similar to the neckline in the figure head and shoulders. The double top also indicates a trend reversal and appears only after a pronounced upward trend. A mirror image of the double top at the bottom of the market is the figure double bottom. The formation of the double bottom indicates that the strength of the bears is over and it's time for the bulls to manage the market. Now let's talk about figures of continuation of the trend. After all, it's not the figures in the market that mean the prices will turn back and go in the opposite direction. Models flag and pennants mark a short pause in the dynamic trend, and the formation of these models must be preceded by an almost straight line of the price movement. They represent markets that were running too fast, so they need some rest before they can go in the same direction. Flag and pennants are among the most reliable models of the continuation of a trend and a trend reversal, and appears very rarely after these models. First of all, pay attention to the rapid increase of prices followed by a large volume that are preceding the appearance of the model, as well as the sharp decline in activity in its formation, showing that the market is entering a phase of consolidation. Then the activity increases rapidly during the breakthrough of the upper trend line of this figure. The construction of these two models is very similar, and the flag represents a rectangle bounded by two parallel trend lines inclined in the opposite direction of the prevailing trend. The flag should be directed a little upwards during the downward trend. Model pennant. Two converging trend lines can define it, and the pendule resembles a small symmetrical triangle. The formation of both models is backed by a gradual reduction of the trading volume. The latest category of the figures are the so-called bidirectional figures. If you see the market with this type of figures, it may tell you of the possible continuation of the trend or its reversal. One of the most popular bidirectional figures that you may find in the market is the triangle. There are three types of triangles. There's ascending triangle, descending triangle, and symmetrical triangle. In the ascending triangle, its upper boundary is a horizontal line that serves as the resistance for the price, and the lower boundary is inclined upward. The formation of the ascending triangle more often ends with a breakdown in its upper boundary. In the descending triangle, the lower boundary of the figure is a horizontal support line, and its upper limit is inclined downwards. The formation of the descending triangle often ends with the breakdown in its lower border. The last type of triangle we'll talk about is the symmetrical triangle and is formed by two converging lines which are symmetrical to each other. This type of triangle appears more often in the market. It is believed that the formation of the symmetrical triangle often ends with a breakdown in the direction of the trend that existed before its formation. However, regardless of this kind of triangle we have, there is a valuable thing that it gives us. Once the triangle is broken, the purpose of the price is the height and will be the location of our take profit. In the next video tutorial, we'll talk about the candlesticks and their types.